Well, the way that we think about it, and this is more broadly, but it applies to the bank as it does to everything else. If you invest for for the long term, 3, 5 years and longer, what we need to think about with as much confidence as possible is what cash flows are going to be like in the coming years. The difficulty for the obvious difficulty for banks is it's extremely difficult at this point to forecast, what profitability, and which may be the wrong word, of course, that will be this year and next year. In order to enjoy returns for the long term, you need to survive. There's no question about it, but the banking sector, as discussed, all around the world is in a much better shape than it was 10 years ago. I don't think at this point, it's not a systemic issue, but it certainly is a very likely issue for people investing in the shares of these banks. So from our perspective, what we do is go through the portfolio and indeed, other companies we're looking at and see, where is our degree of confidence unchanged or only marginally worse, and where's our degree of confidence really, declined substantially. And unfortunately, when it comes to, financial shares, at this point, it's very difficult to make, even really quite short-term predictions, never mind ones to the medium and long term. I mean, it's very clear, it's already obvious to us during this crisis. We've been reminded of the very important fact that equity is the highest risk-bearing part of the capital structure. And when you're the highest risk-bearing part of the capital structure of complex financial instruments like banks, then you're clearly right at the cutting edge of risk-taking. And it's a question for people, of course, whether they want to be at that point. It seems very, very early in this ongoing crisis to make that decision from our perspective.
Ali, you're a 3 to 5 year investor, and one of the questions I think that keeps coming up and we're grappling with is whether all this stimulus that is being thrown at the financial markets now will be inflationary or deflationary going forward. And of course, that is an important question to ask, because it then raises issues about whether you buy equities at these current levels in the belief that they will be one of the asset classes that benefits from inflation once we come through the other side of the health crisis. What's your call on this?
Well, from a macro perspective, I mean, certainly, I think that the near-term prospect, I think, is much more disinflationary than inflationary. There's an argument, and it's an interesting argument, of course, that with huge government stimulus, down the track, and some people argue governments will try to deflate away the enormous debts they're going to emerge with. There's an argument that inflation may pick up down the line. However, given the very large rise in unemployment and the fact that that the textbooks will tell us you get a diminishing return on every extra dollar of debt that you add, and of course we're adding huge amounts of debt all around the world right now. Our view is that for now it's far too early to start thinking about a return to inflation.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.